So earnings coming in at $5.02 a share. That looks like a big beat. We'll have to see if it's comparable. FICC trading revenue coming in at $1.45 billion. That did beat estimates. In banking revenue coming in at $1.8. That also saw a nice beat of estimates. And equities trading coming in a little bit light at $1.76 billion. The stock up by 0.2%. So to recap, it looks like a really big beat on earnings. But again, we don't know if it's comparable. We did see a beat versus estimates in FICC coming in $1.45 billion. Investment banking revenue a beat, $1.8 billion, and equities a little light at $1.67 billion. I know we're still going through this, but the FICC at first blush seems a little bit encouraging considering it beat estimates and it had its worst performance since 2006 for the first half of the year, Alison.
So it does look encouraging. My guess is, whenever we get a big beat at Goldman, it tends to be the investing and lending line. That tends to be a little bit more volatile. That line probably benefited from asset price movements in the quarter. But the FICC result really, I think, again, we're going to have to dig into it, but very encouraging. Handily beat estimates. That's, I think, the only bank that really beat by that type of margin. Mm-hmm. And so a couple of things we'll want to look into and hear about in the call. One of the things that we were talking about this morning was the recent moves we've had in commodity prices. Mike McGlone, who's BI's commodity strategist, has been, looking at that and looking at some of the price movement, doing some good work there, which seems to be encouraging for Goldman. Keep in mind that they have relatively more exposure to commodities. That's something that hurt them in the second half. Was there some improvement late in September that helped the bank? That's a key question. Hedge funds, that's another area that's hurt Goldman Sachs. They're more exposed to the active client, to the hedge fund client. We saw hedge fund flows basically turn to inflows in 2Q. We don't have the numbers yet for 3Q, but a lot of encouraging signs on that front. So did we get more trading? Was that able to help the bank there?